And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to the Coach's Playbook / House of the Dragon recap. Until a few seconds before there, I was worried we were going to cut over into it. That's all exciting. We're finally all watching a show. But you know what else is exciting, which is our topic for today, is we have some program changes for the trading combine. We want to dive into those. First, Mick, do you have a trader shout out today?
I do have a trader shout out, Jack. Shout out to Chadrick Fertil. He's up 4,500 right now and still going. So 46 as we speak. So in a nice winner there with a couple contracts on. So big shout out to him. And then also, while I'm talking about people up $4,000 or more, shout out to Heejin Park up 4,100. So some big days out of the traders early to start this week, which is really awesome.
Well, good for him. So I have two goals today, which are to go through the rules changes and to let Hogue talk. We got some feedback. We got to make sure that we get our Hogue time in. But outside of that, I thought maybe Dan, since you're part of the risk team, you and Mick, maybe you guys could talk a little bit about what changed over this weekend and kind of why we did it too.
Absolutely. I mean, I'm pretty excited about it. We've heard about it in the past. There's a weekly loss limit. That is now gone. I will sit here and say, set a weekly loss limit. You don't want to bury your whole account in 1 week. So maintain some sort of personal weekly loss limit, but we're not going to punish you if you hit those levels anymore. We also got rid of the economic release rule. There were a number of economic releases that we wanted you to flat 1 minute before to 1 minute after, to include FOMC, unemployment number, crude oil, natural gas. Now you can participate in those. I would say you don't want to play it just to try and catch a quick move. If you're in a trade, potentially going into it and you've got your risk covered, or maybe you're in a really good profit and you can take a little bit of heat on that, then by all means, you can hold on through that, but you really got to be extremely cautious. We know crude oil has created some pretty large ranges here over the last, I would say, year or so. It's not uncommon to see it move a couple dollars. I think today I've seen it up and down about $1 or $2 high to low. So pretty decent range there. That's pretty big. So if you've got a one lot and you see that crude oil move $2, that's $2,000 per contract. And I know a lot of people like trading a little bit of size, and it can go against you just as easy as it can go for you. You see these movements, and in hindsight, you can sit here and say, hey, if I was long crude oil, I could have made X amount of money. But what we forget about is that volatility in between on these numbers. So it may go 1,000 in your favor. It may go 1,500 against. You get shaken out of that 1,500, and then maybe it goes in your favor again. So those are the things you just got to keep in mind. The onus is now on you as the trader to manage your risk through these.
And just to clarify it before I kick it over to Hogue, Mick, when we say we could trade through economic releases now, you still can only trade the permitted products during the permitted time. So I thought you're sort of our CME maven. Maybe you could just say a few words about that real quick.
Yeah, I'm definitely happy to touch on that. Really quickly, I want to preface, and this is kind of avoiding your question just in the first part of my reply here, but our mission is to turn people who trade into better traders with healthier habits through learning by doing. And, up until this past weekend, we had rules that, the weekly loss limit, it was a hard stop, no trading in economic releases. And, us changing these rules, we're really putting it on the trader, and you're going to learn through your own trading whether or not, you should have this concept of a weekly loss limit, only losing X amount during a week, which is something that you need to be considering in real life if you're trading your own account or with another prop firm. And then same with the economic releases too. When I first started trading, I was interested in, putting a one lot on ahead of the crude oil inventories because I was going to see it, goose one way or the other, and I'd take my gamble. But that's what it was. It was a gamble. And, over time, I learned that I'm going to sit on my hands during these releases. And, I've spoken to a number of other professional traders that like doing the same thing during releases. So, I think you have the freedom now to make your own bet a little bit more so than you did prior to that. And maybe some of you will want to do this on a regular basis. Other ones may not. For myself, anytime I've gone into an economic release with a position on, over, the 15 years of trading my own account in one way, shape, or form, I'm not ahead trading into economic releases. I'm behind. And there are a lot of other smart, wealthy, successful traders that would say the exact same thing. So that's my 2 cents on it. And then regarding one thing I want to point out is, for our swing accounts, we still do have the weekly loss limit, that 500 weekly loss limit for those that are trading micros on the swing accounts. As far as permitted times, though, I mean, these markets that are open, many of them 23 hours a day, you can open positions at, 5 p.m. Central Time in the evening. And then, we still want you to close it out at 3:10 p.m. Central Time in the afternoon. So we still do have the permitted times, but you can trade into economic releases.
Yeah, great. Yeah, we figure everyone's big boys and big girls out there. That's your choice. As we say, maybe we're not the biggest fans of trading through releases. I was interested, Hogue, your time to shine, how you think about loss limits beyond the daily loss limit. Like, everyone's got to have a daily loss limit where you hang it up. But what do you kind of think of when you're, let's say, on the opposite of a heater, shall we say? If you're trading poorly, how are you deciding when to stop and reevaluate?
Well, it's speaking from personal experience. I've started a week at a pretty decent account level, and throughout the entire week just whittled it away to practically nothing, just because I didn't have the hard rule, or at least the internal rule, to say, what, if we get to this level, things aren't going well, we're going to take a little time off or just walk away and come back tomorrow, just to see what happens. I mean, if it's happened to a trader, it's probably happened to me, and I've, seen the benefits of the weekly loss limit. If things aren't going well, it's usually something, of course, that we're missing. And if we're missing something, maybe it's best that we just kind of step away, take a little bit of time, come back next week, whenever. Maybe it's just a market state thing. So you wait out that market state that can, get you back on the positive side. So, the weekly loss limit that you put on yourself is going to be as equally, if not more important than the daily loss limit that you put on yourself. You can do a lot of damage in one day. You can do a hell of a lot more damage in an entire week. So even though you don't have that imposed on you now, my suggestion is find your weekly loss limit, and then find a way to stick to it. It's never going to be easy to try and stick to something like that, because we all have that little voice in the back of our head that says, well, what if the next trade's going to be the good one? What if this, what if that? You just kind of don't want to depend on what if. As far as economic releases, I mean, I've taken my share of positions in the economic releases. I've had some wildly successful days. I've had some really miserable bad days. If I add up the totals through all of the situations and positions that I've held into economic releases, I think I'm about even. The difference is the wear and tear on my heart and on my hairline.
Oh, I was going to say the same thing. Is with the trading the economic releases, there's nothing that's, just that sinking feeling. That's the thing that I really don't miss about trading professionally, is just that like sinking. Your blood pressure is spiking at the same time your stomach's sinking, and you got to try and get out of whatever mess you got yourself into through a number. It's not fun. I think you're right about that.
And you're standing there or sitting there in this case, you know that something is going to happen that's going to be really beneficial or really bad. Your hands and feet start to get really cold. Your body actually pulls oxygenated blood out of the extremities and brings it to the major muscle groups and into the major organs of the body, because it knows that it is going into a fight. The last thing I really want to say is when you think about doing something, it's not a matter of if you can, is if you should. I'm reminded of Jeff Goldblum in Jurassic Park when he says, the crazy son of a whatever did it, but he never thought to ask. He just wondered if he could, never asked if he should. One thing important to ask yourself.
Listen to Dr. Hogue talking about oxygen levels. I used to grab my guy's hands like right before like unemployment number would come out. Everybody's hands were freezing, because your body is preparing for a fight. Yeah. I would say in regards to trading and the economic releases and the risk reward, there's been, for me, few things that are more frustrating than wiping out, a couple good weeks of trading, a couple good weeks of work in about 10 seconds because you took too much risk.
Yeah. And there's some of that stubbornness of not wanting to cut trades. I've also done the maneuver, maybe some of you have too, where you're really trying to get out of something or at a better price, and you take it a little too close to the number, and then the markets start thinning out and the volume disappears, and then you're just in it. Nothing more you can do. Those markets you be sure, if this is something you're going to do, be sure to be watching a bunch of these numbers closely without trading, or trading in the simulator or something like that first, because you need to get a feel for just how thin and whippy those markets can be and how gap they can get before what numbers. You should know what sort of gap to expect before an unemployment versus, Fed's a big one. More power to you, but do your homework for sure.
One thing I want to add to this too, because I know a ton of people are going to go out there and look for some education on trading into numbers and around these numbers. Keep in mind when you're looking into educators, make sure if they're talking about trading around numbers, they're talking about outright positions. My background as an options, where I began in this world, was in the options world. Economic releases are where we made our bread and butter. That was the exciting day. That was when like good things were going to happen because volatility increased, which creates more opportunity in the options world. But keep in mind, every position we take is completely hedged and covered, and we've got a couple of different outs. It's like playing chess. You got a couple different maneuvers when you're into these economic releases and you're trading around these numbers. As an outright position, you're right or you're wrong. And sometimes you're wrong, sometimes you're right, but you're still going to be wrong because it goes against. And that's where that difficulty becomes, because you have the idea on the direction doesn't mean it's going to play out in that short time frame and how you want it to. So when you look into educators, make sure if they're talking about this stuff, they're trading an outright position. They're not trading covered positions or hedged positions or anything of that nature. That's really where the difference is. The outright positions, you got to, I would say, less than a 50-50 chance of being profitable. Not just necessarily right, but profitable. That's the difference. We can be right and still lose money. We can be right and make money, but it's all about being profitable.
Well, yeah, I'll tell you mathematically how you get below 50 on that. It's 50-50. The market's going to go one way or the other. That's 50-50. But then beyond that, it's do you get blown out or whatever before the trade that you wanted works, right? So I wouldn't do it. Like, once again, you were trading options then. I was trading spreads and butterflies, which once again are just our hedged positions for curve, etc. And yeah, the outrights, it's just going to be a coin flip. So it's a free country, free.
And not to mention, you've got volatility increase. So there's going to be slippage. So you may have stops on that aren't getting filled. You may be thinking you're working in order and it's not going to happen. Slippage increase. Watch how thin the liquidity gets when these numbers start to get ready to go. once they release that number, you'll watch the spread open up drastically and you'll lose it in the dome real quick.
Yeah, and when you're looking at that, think about how close your stops would be if you were just going to kind of bracket above the market and below the market, putting in stops to get in. If you do that and you get filled and you have a bracket attached to that, sometimes the market can beat you to the punch and your stop will get rejected at the exchange level, and that's going to just leave you out there and with all of that risk. So I know a lot of folks like to, just kind of bracket above, put a stop buy stop above and a sell stop below to get into a position if it's going to really knee jerk one direction. But you got to be careful with that, because we've seen on many, many occasions, I know personally, where I'll do that and I will, the market will beat me to my stop. So if I have a stop to get long above, my stop to get out is rejected at the exchange level, because the spread of the bid and offer is so wide, the stop is no longer below price. So there's a lot of ways that this can get really dicey really quick. So just be aware of that. Make sure number one, you are ready and willing at your screen to get out of anything that you need to get out of. Mick, I was going to talk a little bit about buy the rumors, sell the news. What do you think of that?
Yeah, I'm glad you brought it up. I was gonna, when you say that, it kind of was about, I want to talk about what I was thinking about too. Similar though, there's that phrase, buy the rumor, sell the news. One thing you got to keep in mind with these releases is you might see a crude oil inventories or a nat gas inventories, come out on Wednesday or Thursday, and we'll have a bullish number, but the market sells off. And it'll sell off for the rest of the day, potentially. Or it's a bearish number and the market, rallies. So with that, I mean, some people that might try and tiptoe in or dabble with trading these economic releases, you can't hang your hat on those inventories reports. And part of the reason why you can't do that is, those releases come out on Wednesday and Thursday respectively, but it's based off of information from the previous week too. So there's other information that's floating around that's newer, that is getting applied to those markets.
Yeah, definitely. Yeah, it can go either way. And one last thing on the brackets, especially if you're trading a live futures account, just absolutely do not do that, because what'll happen is, and I've seen this happen because we used to do it when we trade spreads through numbers, is you will get hit. Your resting order can always get hit, right? The stop is never guaranteed, and you will see the number and the dome layer go, and you'll be like, nice. I just got filled on both ends of this. That's a winning trade. And you will look at your P&L and it will be the opposite of a winning trade. It'll be very negative trade because you got hit on one and then it completely missed your stop loss order to chase the market. And suddenly you just lose 20 ticks or something for just the hell of it. So watch out for that. That is my Jack's fact for the day.
And I do want to add one thing too, growing up, you don't always listen to mom and dad. You guys will experience this if you get into it. I don't want to sit here and say you can't do it. Obviously now you can totally do these things. Just be cautious if you're getting into it. I saw a comment talking about, trading a micro through it to kind of get the feel. By all means, if that's, because I know a lot of people out there, they want to kind of get the feel of trading these numbers. I 100% get it. Just be very cautious going into these things and be careful and focus on the risk side. At the end of the day, Jack said it. You guys are big boys and girls. You're going to do what you want to do, manage your risk. And that's the biggest thing for me.
One of the things that I've always been guilty of is I seem to have to learn the hard way every time.
Don't touch the hot stove type thing.
Yes. Take our advice for it. Be cautious with this.
Yeah. Well, anyway, sorry to get a little bit pessimistic there on that, but this is great news overall. Hopefully this makes the program simpler. Dan, do you have a quote today for us to?
Yeah. Anonymous is back hitting it again.
Killing it.
Just killing these quotes lately. And I'm sure everyone's heard this one in the past, but just because you can doesn't mean you should. So just be cautious, manage your risk around this stuff.
Mhm.
Yeah. Well, Hogue, any further words of wisdom? We make sure you get every word an opportunity here.
Yeah. I think we all know the right thing to do. Just a matter of doing it, you can hold those positions. Hopefully you're always going to make money on it. But odds are there's going to be losses too. So be prepared for both. Blessings, everyone.
We'll see you next week.